please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Chartbusters, a show we're going to highlight a whole host of buzzing stocks. Well, it's a good start to this trading session. The Nifty is holding with good gains of close to around 50 points. The Sensex is up close to around 150 points. And the mid-cap index is, well, holding in the green. So fair to say, we're moving back towards the 10,500 mark. And after a couple of rocky days, well, the bulls will feel they're back in the game. Hey, Mangalam, morning.
Morning, Nigel. You know, the bulls will feel they're back in the game, but remember, we're still hovering around yesterday's highs of 10495. That's exactly where we are. Need to see what is taking place, whether we go ahead and cross those highs or not. But interesting data coming in from the options side. Yesterday in the trading session, we saw a lot of put writers getting a little jittery. Now they're getting back into the game as we speak. The 10,400 put, nearly 6.5 lakh shares added in open interest out there. And at higher levels, 10,500 put. That one should come up for you. Remember, yesterday we saw some unwinding on that strike. And the 10,500 put, as we speak, has added close to 5 lakh shares out there as well, with the open interest decline adding by about 5 lakhs and the premium declining by about 23%. So for about 100 rupees a pop, some bit of writing seen there. A lot of it packed in the next half an hour. I shall start with all the headlines as we are speaking. Dr. Reddy's, that stock is in focus as CNBC TV18 exclusively accesses the establishment inspection report issued to the company's Duvada facility. The EIR highlights issues such as repeated instances of employees providing false or misleading statements. Dr. Reddy's tells CNBC TV18 they are undertaking cultural transformation at the plant.
And Reliance Industries gains after commissioning a refinery off-gas cracker complex with a capacity of 1.5 million tons per annum in Jamnagar. Analysts say that this move will add close to around 10% to the company's EBITDA by FY19.
Titan gains over 2%. The jewellery segment sees a double-digit growth after the government removed PMLA provisions for the industry. The company says market share growth for Tanishq continues unabated.
And VSC Tillers gains after posting strong tiller sales for the month of December. The stock surges over 8%, even as tractor sales remain flattish for the month of December.
Orbit Exports, another big gainer today with good volumes. The board is set to meet on the 5th of January to mull a buyback.
Okay, all right. Well, the Nifty is moving towards that 10,500 odd mark. I think the Asian markets as well, which have opened up, they as well have opened up with strength. Overnight, the global cues as well were quite positive. So on the back of that, we're seeing a bit of a rebound in today's trading session. But how should you trade the Nifty? Ashwini Gujral is back with us. Ashwini, well, we're heading towards a bit of a congestion zone at around the 10,500 odd mark. Is there a trade on the Nifty?
See, we are consolidating at higher levels. I mean, bears have tried a couple of times to take the market lower, but today we've held on to the gap. Now, things become interesting here because on the banks, particularly financials, are recovering strongly, and hardly two, HDFC Bank and Axis Bank, now remain in the negative. So I would think that at some point, if we are able to get past this, 25,500 on the bank Nifty and broadly 10,500, 520 on the Nifty, there could be some amount of short covering that could take place. So I would remain long on the Nifty as well as Bank Nifty for the moment. It will take some time in crossing, but chances are we will cross on the upside. As far as stocks are concerned, Capital First is a buy with a stop of 705, target of 730. Fortis is a buy with a stop of 164, target of 178. And JSW Steel is a buy with a stop of 266, target of 292.
All right, Ashwini, just to hang in there, the mid-cap index has actually now moved to the high point of the day. A lot of stocks moving higher. EIL, that one should come up for you. A sharp spike in the last 15 odd seconds that we saw on Engineers India. Ashwini, a trade on EIL, it's up 3% as we speak. Majority of those gains coming by in the very recent past.
See, today all kinds of oil marketing stocks are higher, and generally EIL tends to follow their lead. So my sense is that Engineers India, you can buy with a stop say around 190, and you'll probably see 220, 225.
Okay, all right then. So that's the view on a whole host of stocks. Thanks so much, Ashwini, for stopping by and in fact giving us all those details. But just keep an eye out on the markets. There are quite a few stocks. Capital first, pull up the intraday chart. That stock is spiked up. That's one of Ashwini's picks. It's moving to the high point of the day and moving with some good momentum. Also keep an eye out on another stock that doesn't normally have very high volumes. Ambika Cotton Mills. That stock suddenly is gaining. It's moving higher, and it's moving higher as well on higher than normal volumes. Still not very high, but it's locked in upper circuit, so not finding too many sellers at this point of time. And Chartered Logistics as well. I think we had the management a few trading sessions ago on this show itself, and that stock as well has spiked up. I think it's up close to around 10% as we speak. Well, time for some commodity market action. Then the metal stocks, they're buzzing around today. Manisha Gupta is with us for a quick roundup. Manisha.
Thank you so much for that, Nigel. Well, my metal stocks may be buzzing on the higher side, but not the metal prices clearly, because even as Shanghai started on a positive note, it hasn't been able to hold those kind of levels. Well, the US dollar has paused and from the declines that is putting pressure on the metals. Winters, in any case, is not a very strong demand season here. And remember, we've just started this year, so you have many of the funds, money managers, hedge funds, etc., still allocating their monies for many of those metals. So we still don't know what the weightages are in sense of asset classes when it comes to commodities, and that also seems to be pulling the prices down. So when you look at the non-ferrous metals, well, it really is about the lead prices, which are doing good. Zinc also seems to be trading in the positive, but everything else is trading slightly in the negative. The lead, of course, is trading firm because of the winter demand expectation. There is a Goldman Sachs report which says that they are expecting the zinc prices to outperform in the first half of 2018, though their better bets and more bullish bets definitely come in for copper for the whole of 2018. A quick word on the precious metal space as well, and with the pause in US dollar, you have seen some decline come in for the gold and silver prices also. So even as we did touch $1,320 per ounce in the international markets, we are trading slightly in the negative in the markets there. Silver prices, of course, trading at a 5-week high. So when you look at all of that metal space, it perhaps is silver and lead that shines bright in all of that sector.
All right, Manisha, thanks a lot for that. One of the stocks that is busting the charts as we speak is Orient Green, not a stock that we usually talk about too much, but up after the divestment of its biomass subsidiaries. Mr. S. Venkatachalam, the managing director of the company, now joins in. Thanks a lot, sir, for joining in. First of all, wish you a very happy new year. Looks like your new year started on a good note. You've divested the biomass units. The investors are liking that, but if you could tell us a couple of things about this divestiture. One, how much of the loss goes away from your books and how much of the debt goes away from your books? What kind of debt do you stay with after this divestment?
Yeah, sure. In fact, very happy new year to everyone. And the basic thing is the biomass had about 106 megawatts and it was always contributing, in fact, negative EBITDAs over the last 2-3 years for various reasons. So we came up with the idea of divesting it and giving the shareholders value for their money. So the write-off in terms of the books will be in the biomass portfolio will be about 310 crores will be off the OGPL books, and accumulated losses of over 50 crores also goes out of the books, OGPL books. Now that leaves us with a wind portfolio, and you're aware that Q2 we had a PBT of 54 crores as against a PBT of, that is H1, as against 16 crore in the previous year because of very good wind evacuation in Tamil Nadu and much lower finance costs that we're doing, which leaves us, the wind portfolio will have a overall debt of 1250 crores as a bank debt and 400 crores of internal, that's a group debts. Which also we are working towards refinancing them. In fact, the interest rates and the tenures, we've already done a 5/25 on 1,000 crore of the bank debts. And the refinancing will help us. We are looking at, in the next couple of quarters, we will be looking at refinancing it to, let's say, single-digit levels, which there's a lot of renewed interest because the wind portfolio is also started doing well.
All right. Hi, Mr. Venkatachalam, sir. Good to have you on the show as always. Sure. You know, you were just telling us, I think, very approximately your debt will come down to around 1,650 crores if I, club.
That's right.
1,650 crores. For the first half of this year, sir, your finance cost was around 108 crores, very approximately. So you're talking about refinancing your finance cost. If I annualize this, this comes to around 216 crores. For FY19, What can your finance costs look like, sir?
See, we are looking at a reduction of finance costs by about 25 to 30 crores. See, on a portfolio of about 1250 in the bank debt itself, we are able to reduce by about 200 basis points. It will give us about 25 crore of...
By when will this happen?
See, we are in talks with various banks, and mainly because of the wind portfolio looking strong, many of the banks have showed a lot of renewed interest because the biomass portfolio is also out. So I guess by mid-June, I think we should be completing all this, or if not earlier.
All right, Mr. Venkatachalam, you sound pretty optimistic as far as the future prospects of the company are concerned. Take you back to the comments that you had made in your earnings call as far as the next 1 year outlook is concerned. You said that if previous year we did an EBITDA of close to 290 crores, we're looking to add 30 to 40 crores only on the back of strong wins. Apart from that, you will have lower finance costs and you have a loss-making business which is off the books. So what kind of EBITDA are you looking at in FY19? What kind of net profit are you looking at in FY19? You have a lot of levers for you.
That's right. In fact, the EBITDA itself has gone up from 233 in H1 to 250 in H1, and we are on target for about 330 because the December wins also have been fairly good. So we've gained a bit back in December as compared to the last year. EBIT itself has gone from 150 to about 175, EBIT part of it. So all this, I mean, will give us an EBIT of 330 is what we expect, if not more.
All right, Mr. Venkatachalam, you're saying that your wind business is looking up, but the wind tariffs, sir, that we have been tracking of late, they have come in much lower. I think it came down to around sub 3 rupees.
Yeah, in fact, the latest quote was 243. I really have no comments on how sustainable those tariffs are. In fact, even the wind industry is quite skeptical about these numbers.
Correct.
See, for us, our Andhra and Gujarat is on a PPA model, which is a fixed tariff, and they will not revisit these tariffs because they're more than 3-4 years old.
What is it fixed at, sir? The rate?
See, Gujarat is 4.15 plus 50 paise GBI.
Okay.
The Andhra is at 470 plus 50 paise GBI. And in Tamil Nadu, we are totally on the group captive where we get about 5.5 rupees net of all the expenses in terms of the transmission, distribution and other costs.
So is there a risk that, the procurers may ask for a bit of a pushback or something of that sort? Is there a risk?
When do these PPAs get renegotiated, sir? I mean, that's the risk we're trying to understand.
Every 2-3 years, we do renegotiate. And of course, there were pressures, but now the coal guys because there was a lot of competition from the coal guys itself, the coal guys are looking at improved, they are not able to sustain the levels with those tariffs in the group captive structure. So they are looking for an increase. Secondly, Tamil Nadu itself has promised a 6% increase under the restructuring scheme. So they are looking at a 6% increase. They have been mandated a 6% increase. So we get a 50% improvement on that.
Okay, sir. All right. Mr. Venkatachalam, finally, sir, before we just let you go, your promoter holding is at around 71%. I think you were looking at some preference or maybe, in fact, increasing stake. Could you confirm or deny that? That's the first part. And what debt level will you be comfortable at? From 1,650 by FY20, will you look to bring down that debt?
Yeah, we will be looking to bring down that debt because, see, quite a bit of it is about 400 crores is the internal debt. And 1250 crore is the bank loan. So we should come down to about 1100 plus about 300 in the next 1 year.
Okay. And you're looking to increase stake?
There's no this thing of that as of now. At least we've got a 71% is the promoter holding, which includes Bessemer and Olympus. Now we are looking to kind of break that structure so that they can look at their options. Bessemer and Olympus can look at their options.
So are you trying to say that Bessemer and Olympus are going to sell their stake or reclassify themselves as promoters? And if yes, will you buy that?
As of now, there is no such plan. We'll have to look at it as it comes.
All right. Thanks a lot, Mr. Venkatachalam, for joining in and giving us all those details. The street certainly liked what you said, the stock at the high point of the day.
Keep an eye on a couple of stocks. Berger Paints that did so well. a couple of trading sessions ago. That one, in fact, is coming for some profit booking, so keep an eye out on that one. I remember in the green, now it's in the red. But keep an eye out on a couple of frontline stocks, and one such stock is Dr. Reddy's. Now, remember, CNBC TV18 has gained exclusive access to the establishment inspection report issued to Dr. Reddy's Duvada facility. Ekta, who has got her hands on that report, is here with the fine print. Ekta.
Well, thanks for that. Yes, we have managed to access the EIR, or the Establishment Inspection Report, which was issued to the company's Duvada facility, the Unit 7 of the Duvada facility, which is basically an injectable unit. Remember that this is now less than 10% of sales, but it is important because there were important filings from this particular plant, and it has been under warning letter since 2015 by the US FDA. It was re-inspected in 2017 of March of 2017, and was issued 13 observations. Now, after that, the EIR was issued by the US FDA in the past 2 to 3 odd months, and the company had come out with a clarification on the exchanges that yes, we have received an EIR for Duvada, but it does not mean that the inspection is closed. So that is one important takeaway from this, that all EIRs issued does not mean that it is a closure of an inspection. It just means that there is also a synopsis which is provided about what exactly took place in the inspection. So for this particular EIR, it's around 64 odd pages, and what really stood out to me is that a couple of things. I want to highlight the fact that it continues to be an OAI status, or an official action indicated status, which was issued in 2015, and it continues into 2017 and 2018 as well. So that means that there would be a re-inspection which would be needed for this plant, but that is pretty much known. Separately, the US FDA has gone on to say that in the 2017 inspection, there were numerous items which were not corrected from 2015, and there were repeated instances of employees providing false or misleading statements discussed with the management. These employee issues, which are highlighted quite significantly in the EIR, seems to be something which is a key highlight according to all of the experts that I've spoken to as well, where that might in fact, or the remediation needed on that aspect could be something which would be critical for the management in order to basically clear the plant once a re-inspection takes place. It also highlights the kind of cultural issues they have at the plant. The management did say that they are currently in the process of solving the employee issues that they have faced at the Duvada plant.
Right, Ekta, thanks a lot for that. Let's move on from one news break to another news break confirmed. NMDC taking a steep increase of prices in fines and lumps. Remember, yesterday we told you first, taking the prices to a near 3-year high. TRK Rao, the director commercial at NMDC, says the prices still are at 5 to 35% discount to global prices. Listen in.
No, global prices are not at a premium. In fact, if you see our on landed basis, our prices are still competitive. We are at a discount at East Coast and West Coast, and also on the landlocked plants like Jindal. We are at a discount which ranges from 5% to 35%. Our volume growth has been quite very good till October this year, but for a major accident on the railway line, it affected evacuation, but we had a very good market. Even now we have very good market, and we hope to have a good market in the coming quarter also. This quarter we did 8.3 million tons, which was less compared to the last quarter, but in the Q4 we would like to see around 11 million tons is the minimum what we can achieve in the terms of sales. The overall year will end with 36 million tons, which will be far higher than the last year. Karnataka, we are hoping that there would be an additional increase by about 2 million tons.
Well, so sources tell CNBC TV18 that the Rural Development Ministry has sought an allocation of 60,000 crore rupees for MGNREGA in FY19. Anshu Sharma broke that story earlier today. She joins in with all those details. Anshu.
That's right. In the current financial year, the budget allocation for National Rural Employment Guarantee Scheme by the government was at 48,000 crore. And we understand that about 55,000 crore has already been spent under this central scheme, which always gets the lion's share in the budget for the allocation, and we understand that Rural Development Ministry has sought allocation of 60,000 crore rupees for FY19. Remember, Rural Development Ministry alone gets about 1.05 lakh crore under budget, and this is a huge budget allocation given to a rural ministry department where National Rural Employment Guarantee gets the highest. So this will be the budget recommendation by the Rural Development Ministry, and this is also because a lot of initiatives have been taken by the Rural Development Ministry in terms of direct benefit transfer, electronic payment of wages, seeding of Aadhaar for wage workers, geotagging of projects done by the employees under this scheme, which guarantees 100 days of work in the rural areas. Considering there will be election in 2019 and state elections during 2018 and 19, this will be given a huge amount of allocation under budget, and the work has to be done to get those votes. Back to you.
All right, Anshu, thanks a lot for breaking that story. Very important as far as the budget is concerned. But before we let you go, just keep an eye out on Reliance Naval. There's no stopping that stock. Someone bought it at the lower level. Seems like it's up 9% from the low point of the day. Remember, one of the only few Reliance stocks now, Reliance Group stocks, which are not in FNO bands.